Good morning, everyone, and a very warm welcome to today's session for our all TB staff across the regions. We thank you for making the time to be here this Friday morning. We know it's a busy time as reports are due, and we don't take it for granted that you first and foremost joined the first few trainings we'd had in the earlier part of the week, and then have made time to be here this morning to finally continue to learn and immerse yourselves in all things VAT returns and identifying missing traders. Thank you to all the champions who've been circulating the links to mobilize teams to join, and also to thank you all the trainers who'd taken us through on Monday, Tuesday, and Wednesday, and who've also been able to make time to be here today. Karibuni sana. We felt it necessary to conduct one final session for all TB staff to be able to tackle some of the frequently occurring questions that had been raised throughout the earlier parts. And today we've lined up a big team and capable team to be able to resolve some of the issues. I also just want to recognize Mr. Alex Morevi, who's been able to join us from the TBHQ, our manager in TBHQ. And I think if he's in a position, we can receive some remarks from him later on, perhaps his reactions to the presentation and any words of advice and encouragement he may have. But today we're joined by Mr. Isaac Momo from the Last Taxpayers Office and a seasoned trainer at Kesra. We're also joined by Mr. Kennedy Wakoli from I&D. They'll be introducing themselves shortly, and I'm sure we all know Mr. Duncan Tiema from TBHQ, SABS, TPS, who will also be here to respond to some of the questions that have been occurring throughout the week. My name is Mendy Mwangi. I work within TPS DTD based at Samia, and today essentially we'll be tackling the questions raised in earlier parts. So there's no actual presentation, but we'll be having a discussion and a round table. Once we tackle the questions that had been raised, there are about 20 or so, we'll open the floor to be able to allow any officer who would wish to make a comment, seek clarification on any issue to do so. And then we'll close by 10:30 at the latest. We should be out, but we don't want to close this session without giving people an opportunity to be clarified on issues and seek guidance on some of the challenges they're experiencing, all with the name of building compliance and contributing positively to revenue growth. So at this point, maybe I can invite Mr. Duncan Tiema just to introduce himself. Then I'll give Mr. Mumo an opportunity to introduce himself, and then Mr. Wakoli from our sister department, I&D ISO, to introduce himself. Then I'll be able to pose the questions and we can go along. Karibuni sana, and over to you, Tiema. Good morning.
Thank you, Mandy, and good morning, colleagues and team members. By name, I'm Tiema Duncan from the TB head office. I'm the subs in charge of reporting for TB KPIs. And I'm so glad to be part of the panel, and thanking you, even the TTS team, for organizing such an important forum for us to have a discussion and just build on more insights on how we are going to better execute our mandate as expected of us. Thank you.
Thank you very much, Mr. Tiema. Mr. Mumo, good morning to you. Karibu sana, happy new month. And maybe you can just start by introducing yourself, where you're based. And yes, thank you.
Good morning, Mendy, and good morning, the entire team. I hope I can be heard.
Mr. Mumo, we can hear you loud and clear. Maybe just to request you to raise your volume a little.
Thank you. And I hope now it's better.
Perfect.
Much glad to be here, part of this wonderful team, trying to collect the information and basics concerning tax-based expansion, and especially in the aspects of VAT. I'm ready with my other colleagues for the purposes of taking up this one. Currently, I'm deployed at the Large Taxpayers Office in the audit program, and 1 or 2, 3 issues that we normally come across concerning missing traders, and we'll be ready to share. Very interesting questions also from your end, from the sessions that you had this week, and any other that we'll be able to tackle. So Thank you so much. Much glad to be on board. Back to you, Mandy.
Asante sana, Mr. Momo. Mr. Momo used to be based in Thika, then he came to LTO and is frequently seen at Kesra, imparting knowledge on staff and students. Thanks, Mr. Momo, for making time to be here. Mr. Wakoli, good morning to you. Karibu sana. Thank you for making the time to be here this morning. Perhaps many officers within TB and DTD don't know you yet. But maybe you can just start by introducing yourself. And Mr. Wakoli, if at this stage you'd like to give us a sense of what your role was in some of the early days when some of these fraudulent schemes were being unearthed, you're welcome to do so at this point. Karibu sana, Mr. Wakoli. Mr. Wakoli, sir, good morning. Kindly confirm you can hear us. We're unable to hear you at this point. All right, Mr. Wakoli, I think allow me just to give you additional rights. Sorry about that, sir. I can see you are now in a position to speak. Sorry, sir. Good morning to you and karibu sana to the floor.
Thank you. My name is Kennedy Wakoli from I&D. My history starts in finance, somewhere in 2006. Then I proceeded to LTO audit from 2010 to 2015. Then from 2015 to now, I'm in I&D. I'm the one who, in fact, was at the center of the 2018 missing trader scandal. Then presently, I'm also in charge of the missing trader task force in I&D. Thank you.
Perfect. Thanks, Mr. Wakoli. I'm seeing you have two devices present. I hope there's no echo from your side. On our side, we can hear you loud and clear. So at this stage, perhaps we just go straight into it. Our comments, questions, concerns that have been raised on Monday, Tuesday, and Wednesday. And then we'll be able to also give you an opportunity to pose any questions, seek a follow-up. You can raise your hand. This is leaning towards a bit of an informal session whereby we are all staff and want to be able to have an interactive and an engaging session with our presenters today. So I think we can just go ahead and start with the first question that came about, and it highlights the issue that things do not go wrong, they start wrong. And the VAT guidelines require a taxpayer interview. Mr. Mumo and Mr. Wakoli, the VAT addition guidelines, which were issued in 2022, require a taxpayer interview. What should officers do when the tax agent or the tax representative is sent on behalf of the taxpayer for the interview? Is the vetting process the same? Maybe Mr. Mumo and Mr. Wakoli, I can see you are unmuted. Maybe we can start with you. If you have any insight on that, or Mr. Mumo, feel free.
Let Mr. Ugo start.
Okay. Again, you just want to be sure that I can be heard as we pick up this, Mandy.
Yes, we can hear you loud and clear. I'd also like to project some of the questions so that we are all moving together.
Thank you. So as you do that, then we'll be able to look at the beginning point of admitting the aspects of VAT registration. So VAT obligation being a very critical aspect in tax collection, it is a special sort of obligation that not just anyone is supposed to have it. In the past, we used to have some confusion where people would just go because they want a PIN to start off a business. They want a PIN to actually, get some processing for help loan and such kind of things. And whenever they would pop into a cyber, then they would go directly on iTax and try to pick the obligations. And they would choose VAT, pay, and others. And now the biggest problem came in when we had a lot of registered taxpayers for the purposes of VAT, but they are actually dormant. Even before iTax, you'll find, even using the older system, that is KRA Online ITMS and even legacy, people had these obligations as inherent because they picked them up when they were doing registration for PINs, unknowingly of the requirements to actually do monthly returns and such kind of things. Then, due to the increasing number of the defaults, there was a hue and cry, even within the authority. Then how best do we do this? Because we have debts that cannot be collected. People only realize about these debts when they come to ask for TCC, when they realize that their PIN has VAT, they have never filed, and all those. So there are massive applications for waivers based on such reasons. Come with your university ID, come with your college ID, and other people would also want to apply for PIN, maybe for transfer of land and those other small processes, but they are not actually trading, but they end up picking up a VAT obligation. So it was prudent for Commissioner to come up with these guidelines back in 2022. Very helpful because it was just rampant and haphazard that someone would go and get that obligation. Fast forward. Now, in implementing these guidelines, and I'm talking about these VAT registration guidelines, assuming everyone under TB has come across them. Now, these guidelines would require that the officer conducts an interview, and this applicant is actually able to surface and present themselves at the office and be able to answer a few questions. In the banking industry, this is normally called KYC. KYC, Mendy, should be know you are a customer. I also believe that should be a term that we normally also apply under TB. Now, based on that, then if it is this applicant who is not able to surface and come for the interview, this question was asking, then are we supposed to go ahead if it's a tax agent or a tax representative? This then calls for us to try and check or validate who is a tax agent and who is a tax representative. Actually, these are two different people. So I like the way the question has been put, tax agent to representative. They are two different. When you look at TPA, Tax Procedures Act, then section 15 and 16 and even 19 will talk about these two kind of people. Let's pick the one for tax representative. You will agree with me that based on section 15, which invites or rather tries to describe who a tax representative is, that is a person sort of acting on behalf of another for the purposes of this act or tax law, meaning that this person may be an individual, the company MD, the accountant, the partner, the trustee, and those kind of aspects. So this is just someone who is representing that other person, that there is a legal basis, liability that this person has come to say yes on behalf of their boss. So if you look at the extent of that liability under section 16 for a tax representative, then that person shall be responsible for performing any duty or obligation imposed by a tax law on the taxpayer, including submission of returns and even payment of taxes. That's said and done for tax representative. What about for a tax agent? A tax agent is someone who is either an individual or even a partnership who applies for a license to act, to conduct business as a tax agent, meaning they are not necessarily there to represent one person, but it's like a practitioner sort of. So when you look at section 19 and 20, they expand the net of a tax agent to be broader than just a representative, because this agent can be like a lawyer, can be like an audit firm, an accountant, who can be doing 10 or 20 or even 100 returns on behalf of other people. Unlike the representative we were talking about, who could be, a mere partner, a director, an MD of a specific company. So having drawn that line between those two, we clearly now have to agree that this tax agent or this tax representative who surfaces and comes to see the commissioner is actually there to beat the duty of the initial or rather the applicant of VAT obligation. And therefore, when this person surfaces for an interview, go ahead. This is a legit person, as long as you can be able to prove that they have the rights, or rather they have been bequeathed, like an introduction letter that this person is going to act on my behalf, not just any other person. So you need to just take care of that, just verify that this person actually works with this company or has come on behalf of this other person, get their details, like you can cross match and check their ID. They are saying they work there, are they there in the payroll and such kind of things? Have they been appointed? Is there that authority to help you continue? Because as they stand, then they merit representing the person you are supposed to interview. And I hope that is clear. Back to you, Mendy.
Asante sana, Mr. Momo, and I think it was good that first and foremost you contextualize what informed the issuance of the VAT addition guidelines in 2022, and then subsequently how an officer can engage with these different entities that come to represent come on the behalf of the taxpayer. I'm tempted to ask at this stage, but I think I'll bring it up later when we discuss special table, that some taxpayers have raised issues and grievances with how cumbersome the process became. They want to conduct genuine business, but they claim that some of the measures that we're putting in place at this stage is restrictive. I think even in November 2023, one of the Nairobi senator had issued a statement requesting for guidance on why KRA is sometimes complicating the process when it comes to, but that was in relation to special table. And I think I'll bring that up at the very end. But at this stage, Mr. Momo, thanks for responding to that first question. Remember, taxpayers, remember, colleagues, you can be posting your comments, questions, concerns. Raise your hand and we'll be able to interject and have you come in with a comment or seeking clarification. Maybe Mr. Wakoli, then we can bring you in for the second question, sir. And throughout the presentations this week, officers wanted to know, at the stage of registration, how can an officer identify these fictitious invoices and that there might be subsidiaries which are part of fraudulent schemes? I should say at the stage of registration and incubation, which varies between 6 months to 12 months at TBE, and Tiema can correct me if I'm wrong. How can an officer identify some of these fictitious invoices and subsidiaries which are part of fraudulent schemes? Thank you. Mr. Wakoli, over to you.
Thank you. The starting stage for identifying missing traders is one, you have to determine the sector in which they operate. So there are sectors where there is basically no input VAT. And many of these taxpayers will then be tempted to generate fake invoices to cover up for that shortfall. So, for example, if the taxpayer appears to you before you and he's in the public sector division, he's a supplier to county governments, to parastatals, chances are he will have output VAT, but very minimal input VAT. So it's a candidate of a person who will have fake invoices. A second instance is somebody who is is a steel mill. If you open the purchases of a steel mill, his inputs will be coming from all over the country, collected by each and every person who wants money. So below the steel mill, you will discover there is a missing trader, because the people who supplied him did not have an input, but they then went ahead and generated invoices. Second example is waste paper industry. The waste paper is collected from all over the country where there is no input, but the person then collecting that waste paper will have to generate fake invoices. Another example, if a taxpayer comes before you and is dealing with a consolidator, consolidators have brought in imported goods for which they have paid import VAT as their own, but they then release these goods to the people who are on the manifest, the actual importers. These actual importers will usually only get the goods and no invoices. So the starting point is identify the sector and then identify the risk in that sector. Another example, a taxpayer who appears before you and has 5 to 8 other registered companies. Many of these people are very young. They would be below 30 years and they will find they have like 10 companies. So if you do PIN association in iTax, you know all his other companies, you can do a track history. He will operate with one company for, let's say, 9 months, then close it, then come before you with another one. So through JasperSoft, you can be able to do a history of all his claims that are being done by the beneficiaries. Now, the difference between what we did in 2018 and now, in 2018, once we identified somebody as a missing trader, and in 2018, the indicator was they were doing a lot of turnover and very little revenue, very little VAT yield. The only VAT that was being paid was at that time it was 6% withholding VAT. Excuse me. So if an individual has a lot of high invoice amounts, 918,000, they're rarely below. So it's not going through a normal curve. Such people will nowadays also insist that a payment is sent to either through check or through TT. So what we are doing, we insist on getting the bank statements to ensure all these amounts, once they are banked, they are withdrawn then immediately. And it's an indicator that this money was not intended for trade. I would ask Mr. Momo to continue from there.
Thank you, Wakoli. Just maybe to wrap up, quite a good background from an investigative mind there. And I really like the way you've been able to isolate. Once the taxpayer is able to come in, then the background, or rather the industry that this person is actually relating or intending to actually work in, will be a big determinant of trying to identify whether to register this taxpayer or whether to deal with those invoices that you are seeing, the invoices that of the transactions that this person actually does. So besides that, the special table, which was a good invention through the compliance improvement plan team, I'm so sure that Mr. Tiama was part of that, was able to link up with BTO for implementing a compliance improvement plan that was based on being able to disable those participants who have been identified before to operate or rather to feature on what we call a VAT tax avoidance scheme. So that was the birth of the special table, that in the event that that person there's enough proof that they have been involved before within a tax avoidance scheme, then they are barred from being active within iTax, because the only problem was that you will find this PIN as an obligation, and then anyone can come and put in as a sort of, I've bought from this person. Whether that person pays or declares, it doesn't matter. Again, we'll be seeing later on tightening of section 17 based on that. And that's when the special table came on board, so that if you have bought anything or dealt with this person, or even if you have purported to transact with them and the system may not allow you to claim from them, then you'll have to look for other ways, alternatives, or other people to work with. So basically, then what would be a tax avoidance scheme? I will direct perhaps colleagues, you need to look at VAT section 66 VAT Act 2013. That's where you'll find the description of a tax avoidance scheme, which is actually defined to be a deliberate action within an agreement or a promise, plan, proposal in terms of undertaking, whether express or implied, that is legally enforceable or even not, that creates what we call a tax benefit. And aspects of tax benefits would be the reduction of VAT liability, to increase entitlement for a refund, a postponement of a liability, acceleration of even the entitlement to do a deduction of input tax, or any other advantage that may arise for you to get this person paying smaller VAT, or topping up their credit, or even getting a refund that is not warranted to them. I think we have dealt some justice on that question. Back to you, Mendy.
All right, thank you very much, Mr. Momo, for even just contextualizing that within the revenue laws. And thank you, Mr. Wakoli, for giving us a sense of where we've come from in 2018 all the way up to how the schemes have evolved up to now. Thanks for that. Then I think at this stage we can continue to move in, and I can see the questions coming in from officers. Please feel free to post them and we'll tackle them towards the end. Mr. Momo, now we move into this issue of backdating of VAT obligation. And there are various scenarios whereby upon registration for VAT, an officer will feel the need to backdate the VAT obligation, or of course the system itself will require the backdating of a VAT obligation, which raises two key concerns. And I think it was Michael Onderi who had posted these questions on Monday, which I think will enable us to get a lot of insight as to how to move about approving such an application and what's the most appropriate date. So, Mr. Momo, I ask, when it comes to backdating of VAT obligations, does Section 18, which talks about the 24-month window, supersede the 6-month rule? And within that, as you can see, the following question is, when it still comes to VAT backdating, does the 6-month rule VAT input window apply to current real time or the time period the taxpayer is filing? And Mr. Tema, if you at any point want to come in at this stage, you're more than welcome to, but maybe Mr. Muma, we can start with you and then take it from there. Asante.
Thank you, Mandy. This is also a very well thought question, and I believe this is the scenario on the ground where you find you have a case, a scenario where you need to backdate, and perhaps you can't even be able to link it with the law, because remember, any action that you do on the taxpayer's ledger, or even your advice as a tax officer, if it is challenged in a court of law, are you able to actually come out and even defend it? Those are the kind of questions that you always should be asking yourself. So it is good that we also link some of these actions that come across our duties with what the tenets of the law provide. Just to answer this, from where I sit, the aspect of backdating is a very interesting phenomena. Why? Because upon registration, and that is under Section 34 of the VAT Act, you will find there are various ways that are provided for. That someone, that reaches a threshold, someone intends to start trading, they may want to register voluntary, the commissioner may enforce what you call an enforced sort of registration. And we also have another one that lingers under what we call the DMS, Digital Marketplace Supply Framework. Now, that one where the commissioner has the power. Actually, the act would say that the registration of that person, commissioner will actually do the registration if he is satisfied that that person is eligible to actually register. So the basis of being satisfied that that person should have registered are what? There's one that we normally pick under Public Finance Management Act, PFMA to 2012. You'll find there that the government of then actually enforced that you will not be able to do business with the government or any entity of the government if you have not registered for key tax heads, and VAT was one of them. Based on that, then you will find anyone trading with a public body is a very immediate candidate for actually doing an enforcement. So you'll find someone has supplied to a county government, someone has supplied to KEBS, KRA, and name them. And perhaps they never charged VAT, depending on the classification of goods. So classification of goods, again, will be very important, because just by the mere fact that the county has withheld, that company has withheld VAT and all that in trying to satisfy their duty of withholding, doesn't mean that the nature of the supply was actually vatable, and that one should not be at all be registered, or enforced registration should not be applicable in such a scenario. Now, if then the commission has the leeway to do that registration, and the date of transaction goes back like 1-2 years, yes, the commissioner is able to register and even do the backdating. So you may find that within our VAT law, we actually have some small gaps in terms of when or covering the commissioner in terms of backdating. But procedurally, within now the procedures that we have internally, backdating has been provided for within our tax system. And this is very important, because for you to register, then if you can align to when the taxpayer ought to have actually registered, then Section 12 comes in there in terms of time of supply. And by the virtue of qualifying for that time of supply, then it becomes apparent that that should be the period when that person should have registered for them to be able to do what is called remission of to submit the return and also do the tax payment. Now, fast forward, when Section 18 pops up, this concerns the aspect of VAT paid or charged before someone has been registered. So because this question has been linked to Section 18, allow me to delve in there and say that prior to registration, then the Act goes ahead to provide. In the past, we used to use what is called a VAT-4 inventory claim. And this was a manual form that someone would fill alongside their VAT-3 and show that they had these sort of stocks or other purchases, and these purchases were able to, they are presently available in their stock currently, and since they are going subsequently to start charging VAT when they trade, then they need that reprieve. This was a well thought idea, which was also existing in the repealed Cap 476 Act of 1990, and it was operational and it leads to a certain sort of a refund, which is not in cash, but in terms of a credit into your ledger. So when you look at Section 18, it has its own limitations in terms of saying that if you are actually dealing with exempt and now they are going to be patable. If you had not been registered, you have reached the threshold and now you have registered, any aspects of you that you incurred tax on taxable supplies which are intended or were intended for use in making taxable supplies. Meaning, if you had stocks, let's pick an example, like you're dealing with sugar or salt before being exempt, then after the Finance Act has been put on place, you have stocks of around 5 million, 10 million, and you have been registered now, or the goods have become taxable. Meaning now, when you sell them, then you'll have to charge VAT. Then it is imperative that you get some reprieve on that if you had been charged VAT on them, and also if they are within your stocks that you'll start selling. So on this basis, then the commissioner is empowered by that section to go ahead and allow you after verifying. In the past, it used to be within 3 months of getting registered, and after an audit is done, then you are able to be granted that. But due to the perhaps the slow pace of the verifications and audits that could be done, you may find that a taxpayer has gone like 1 year or 2 years without that sort of a response from the commissioner. So what was provided for internally was that taxpayer would carry the credit and start off within their ledger, then it can be verified later. If it is found to be to have some problems or insufficiencies, then the same would be adjusted. For that purpose, then that's how Section 18 used to work, and that's how it's supposed to work. BTO have also been able to customize that. I think there's something we need to confirm from them in terms of how do you apply for this and whether it requires special check that would be immediate. Because remember, this is application within the first 3 months of someone being registered. Good. I go to 3B, and on VAT backdating, there's the 6-month input window period. That's also another very interesting scenario. Good question there also, because there was a TAT ruling sometimes back where there was an aspect of today being, let's pick a date like 2022 January. If you have not filed your return for 2022 January and you decide to file it today, then what sort of inputs are you going to claim? Does it mean that the inputs that you bought in December and also that January are not valid for that return if that you had not filed that return? So that as the commissioner also backdates and gets you to the period that you are supposed to be registered, the same commissioner should also be able to grant you your rights within Section 17 as a taxpayer, that you have to claim input that has been directly linked or used on the output that you are to charge VAT. There was a TAT ruling back sometime, I think 2 years ago on the same, and I believe BTO were able to be guided appropriately concerning the same, because in the return of 2022 January and you are filing it today, you cannot have today's invoices to put them there. But if you have valid invoices that occurred in that January or December or November within 6 months of that month, then they merit to qualify to be part of your input deduction. Back to you, Mindy, or perhaps Tiama can put some weight on that. Thank you.
Thank you, Mumo and Mendy. I believe that question has been fully addressed, and I believe clarity has come out, and I believe that's why we have these credit adjustment vouchers that BTO created for such scenarios, was also to avoid inconvenience in the taxpayers who traded with you at that point in time, who have already done their returns. So I believe that has been well addressed. I don't think I can add anything to it. Thank you.
Thank you very much, Mr. Tiama, Mr. Mumo, for those insights on that. I think it's also important to use at the very beginning, Mr. Mumo, you mentioned that every decision we make as TB officers, we should be able to defend. Should we be pushed against the wall with being supported by the law? So I think that's a good point. And I know we'll get further questions on that during our when we open the floor. But in the interest of time, let me jump to the next question, which again is in slight relation to backdating. Maybe Mr. Mumo, we can leave this number 4, given that it by and large is similar to number 3. The question was, what does one do in situations where VAT is backdated? Then the taxpayer claims input from previous months from a supplier. However, the supplier claims the sales were to non-registered VAT taxpayers, since the taxpayer indeed at that time did not have VAT. Maybe Mr. Chema, I can start with you. During a previous session, at some point we were almost told that we may be at the mercy of BTO to do a system enhancement or to relax the system to be able to cater for that. Do you mind highlighting that, or rather commenting on that before we hand over to Mr. Mumo and team, if you would like?
When you're talking about the inventory claims, I believe the same is already provided for under the VAT returns. It's only that maybe most of us are not aware of how it works, and that's why Mr. Mumo, in his presentation on question 3, he just clarified that we need to get the actual procedure through which taxpayers should be advised on applying on the application to claim such inventory, so that they are able to get the deductible input VAT for the stocks held before prior to registration. But the same I can ascertain that it's provided for under the return. Maybe we just see clarification on the application procedure for taxpayers who are affected. Thank you.
Thanks, Mr. Tema. Mr. Mumo, if you'd like to touch on that as well as this next question, number 5, which is what is the procedure for inventory held prior to VAT registration? Let me take that again. What is the procedure for which inventory held prior to VAT registration is ascertained before addition of the VAT obligation, and how is it different from mandatory addition, which was, I think, at some point also called forceful registration? Maybe you can just highlight on those 2 issues, and then we proceed to some TB procedural questions.
Thank you.
Mr. Momo?
Thank you, Mandy. Now, question 4, as Tiema has correctly put it, now that there's a solution within BTO and our back office ITAX has this solution, it's important, and perhaps you can organize a training or a talk with the BTO so that the TB officers can be able to, be taken through the correct procedures and how they would go about that. That would be very important because as long as they have put up the solution, it will be paramount that they also clarify that they take the officers through so that they are aware it exists and this is how it's supposed to work. So on to question number 5, for the purposes of looking at the inventory claim, as I mentioned earlier, for the solution that exists then under the refunds module, you will find all refunds are nowadays applicable through section 47 of TPA, and 18.3 has still been left behind to linger under VAT Act because of this special nature of this type of a refund. So perhaps as they look at that, when BTO is clarifying, they can bring and shed some more light on this. Only one point I would want perhaps to drop there would be, in the past there was a contention as to whether prior to registration, you are looking at the goods that you're holding on stock or any other item that you have actually incurred in an attempt to bring up your business. And the tribunal was actually able, that should be a high court ruling, that anything that you actually incurred then is supposed to be looked at. If it was a building that is used for manufacture or doing business, if it was a vehicle, which is an asset perhaps, then it should also be looked at in providing that inventory claim under VAT 4. I think I would leave it at that, but it's important that Mandy, you get some session with BTO to also clarify some of these things to our colleagues. Back to you.
Perfect. Indeed, BTO coming is a team we can engage. Also, the teams in charge of JASPA and BI Insight, just so that we can capacity build to be able to identify some of those issues Mr. Wakoli mentioned. And at the end of this session, we'll be running a poll, which will, among other things, request TB staff to pose any issues or areas they'd like more training on to be able to equip them with the necessary knowledge. So stay tuned for that, and I request you to just give it a minute or 2 of your time before you leave to respond to that poll. Great. So, Mr. Tiema, maybe we can bring you and the TB team here present. We have a number of seasoned TB officers with us today, and I think from number 6 to number 12, and I'll just pose the questions directly to you, and you can respond, Mr. Tiema, or throw it to another TB officer present today. The first question is scenarios whereby taxpayers have withholding VAT certificates and they do not have the VAT obligation. They are non-compliant and unwilling to come for interviews and submit the necessary documents in order to get registered. What does the TB procedure manual say about forced registration, and does it set in at this stage? Thank you.
Okay, thank you, Mandy, for the question. And I believe you mean what do we do during mandatory registration for VAT? So let's go back to the issue of the withholding credits from VAT withheld by the appointed withholding VAT agents. So you'll find that this is one of the key data sources that is used by TBE officers for recruitment purposes on the VAT. So what we need to first understand is that these withholding certificates have been withheld, some in error, and also some where maybe the taxpayer did not charge VAT. So you'll find that I can relay the question to the number 3 that Momo addressed on, that is on backdating, because why do we backdate? The question is, why do we backdate? Because you see, this is the withholding certificate credits are for a prior period than the period at which we are having this conversation with the taxpayer. So we need first to understand, we need to get to understand these withholding certificates. We've seen scenarios whereby some public entities have withheld VAT on exempt supplies, putting ourselves in a difficult situation, unable to register the taxpayer. So we have to advise the withholder to cancel the certificate, and it kind of gives us I don't know how to call it, because it's like now is, you know, the data set we are supposed to respond, and at times we are told that we are not working on our data sets. So where a certificate has been withheld by withholding agent, definitely we assume that the taxpayer did charge VAT. And maybe Momo will clarify, because where we charge VAT when you're not registered, number one, that is an illegality, and there are fines to the same extent. So for VAT purposes, when you are doing mandatory registration, because this question addresses that, we are allowed by the Tax Procedures Act actually to impose fines for failure to register, because this is not the taxpayer coming in for voluntary registration, but this is a scenario due to the transaction that the taxpayer is involved in. We've established that they ought to have been registered and they are not. So number one, we need to be imposing fines for failure to register. I believe it's 100,000 as provided for under the TPA. So upon that, then we can also backdate to when this taxpayer was first to be registered. So does forced registration set in here? Yes, this is one of the mandatory registrations. But before we proceed, we need to understand, are these supplies that were withheld, are they indeed taxable? If they're taxable, then we proceed. Then the other question is, if it was done in error, perhaps, we also need to confirm that from the taxpayer's point of view, do they fall within the mandatory registration threshold? So it's a question of trying to find out, were these withholding in error? And if not, then is the taxpayer fined correctly in terms of failure to register and also for illegally charging VAT? Where they were in error and we find that the taxpayer indeed ought to have been registered, then we do the mandatory registration. But where they are not supposed to have been registered, then we need to see how we can guide the withholder to cancel those certificates so that we do not also forcefully register a taxpayer who ought not to be registered for VAT. I believe that will be my take to it, but Momo can add in something, especially on the fines.
Thank you, Tema. When you look at the offenses and registration, then for VAT, VAT Act is very selfish because it retained the same under Section 37, and it didn't transfer them to Tax Procedures Act. So any failure to actually register or even to do cancellation when you are not supposed to do the cancellation of registration, someone will be deemed to have done an offense. And if on conviction means if there is proof, then there's a fine that is not exceeding 200,000 or the 2 years imprisonment or even both. So it means it can be from 0 to 200 depending on the circumstance that you're able to analyze. The rest of the aspects, as you have brought them quite well, fully concur and agree.
Asante sana team for those responses. Thanks, Mr. Tema. Thanks, Mr. Mumo. At this stage, maybe Mr. Tema, we can also bring you in, and again, any other member of the TB team can join in and chime in as to what exactly is the role of our RSAs in curbing the missing trader scheme. We often hear about the role of RSAs in onboarding and incubating TOT taxpayers, ensuring compliance, but is there a role for RSAs that we can take advantage of when it comes to curbing the scheme? Mr. Tema, if you can, and I can confirm we do have a number of RSAs present today. They've been joining us and they've been responding to the poll, eager to learn more. Thank you to you all as well.
So thank you, Mandy. I can confirm that RSAs are working hand in hand with TB officers, and their role in trying to prevent most of the established revenue leaks is very important. And we believe that they will also play a part in trying to bring out the missing trader scheme. So you'll see that RSAs have clearly defined roles, and most of them are in the field. They conduct field activities. So you'll see the concept that was borrowed here is from the Italy, what they call the tax police. It's more of a deterrence strategy, whereby if I'm a trader conducting my business and I am tempted to be involved in some illegalities, e.g. what we are calling the discriminative issuance of maybe ETIMs or the ETR certificates, receipts as we were calling them earlier, so that you find that some people may charge VAT and others may not charge on given transactions. So the presence of these RSAs in the field deters the taxpayers from maybe being engaged in such malpractices. And then again, as they go around, the RSAs collect data, and this data is very, very essential for revenue mobilization. What I mean is that, for example, during their field activities, they might come across people who are engaged in active businesses, but these people are actually not registered. Some of them are actually even registered with companies maybe that are dissolved, maybe they have already been liquidated, they have been closed down and written off at the BRS, but maybe due to our procedures as KRA, maybe we have delayed in canceling or stopping such things. So you'll find that these people are in active business, and yet from our point of view, we understand they are not supposed to be trading. So this information being brought back is not meant only for TBE, because the RSAs play a critical role in enhancing compliance at the various areas where they've been deployed. So you'll find that the data they collect informs so much. A portion of it will come to TBE, which is geared towards recruitment. There are those that will go to compliance, and even the compliance officers may be able to understand the actual activities of their respective taxpayers at the field of which they are not able to view, because we rely so much on analysis, and yet we do not see what things on the ground are. Also, they may get some critical information that can be used by our various audit teams. So yes, they play a critical role in trying to prevent many revenue leaks, and also these go hand in hand with the missing trader scheme, because that is how some taxpayers are in various jurisdictions. So we have taxpayers who are trading in Kisumu, the same taxpayers are in Nairobi, and we are not able to, because we don't have that 360-degree view of the whole businesses of the taxpayer. So this data collection, when it has been given to a central point, we are able to tell which taxpayer is engaged in businesses in multiple jurisdictions beyond the TSO, because the TSO also limits us to what extent we can do. So it gives us a leeway to have better collaborations within the TSOs to just bring out these taxpayers who may be hiding in different jurisdictions, and that is a critical role in trying to identify the missing trader schemes. Thank you, Mandy.
Perfect. Thank you, Mr. Tiama. In the interest of time, maybe I can just request Mr. Wakoli, if you have any insight on this. I know RSAs, we are within our DTD department, but do you have any comment on the role of some of our field officers when it comes to curbing these fraudulent invoicing schemes? And I'll tie that in also with number 9, which is an issue raised by some of our taxpayers, or rather some of our officers in Northern Region, who've identified growing cases of VAT obligation applications located in either remote, dangerous, unreachable parts of the country. And I know that in 2018, when you were sometimes unmasking some of these schemes, you found them just under our noses in the leafy suburbs of Parklands, for example. Can you kindly comment on those 2 issues? And then I'll bring you back also on number 14, number 20, and 22 as requested. Mr. Wakoli?
Okay. So for us, we usually do desk investigations. We secularize, we get responses from third parties, and thereafter, then we go for field surveillance. So initially, I think when the RSS were being brought in, we thought they would also work closely with us, attached to the TSOs. So usually what happens is many of these missing creators don't have a location. They will have these machines, Teams and ETIMS machines, but in places which are not marked. We usually recruit informers who will then identify where these things are. So it will be prudent that RSS also interacting with I&D so that we could be able to physically identify the places. Like currently we have about 2 places on my avenue. A small room with the machines, and the transactions they are churning out are billions. So for now, we have not been interacting with the RSS, but it is important because visibility then deters. Thanks.
All right, thank you. And Mr. Wakoli, any idea of how, and Mr. Tema, you can also come in the case where you want to verify a physical location, but in reality it is unreachable. Is there any guidance or advice that TB officers, especially this was an issue raised in Northern Region, can be given in terms of these verifications, images, any scenarios you've encountered that you'd suggest would work here?
Now, we have used 2 approaches for us. We usually identify the IP address of the filed VAT return. Now, the IP address comes out in 2 forms, either as private or public. If it's private, we then call back to the service provider. So that's one way where we identify the location of the missing trader. Where are these returns being filed and what times? Then secondly, we use the phone. We identify the phone number used, 1, to pay the VAT payable. And always it's a very small fraction. So somebody would be doing 100 million in a month, then he pays 4,000. So we would then identify this phone from finance. We will then track it to a location. So those are the only 2 ways that we trace. The hitch we have met is when we are using the IP address, and it is then a public IP address, which is a KRA intranet. The next stage is to move to the PC over which that IP address is linked. And that has become a challenge. But where the filing is done by a laptop, then it becomes a bit harder. We don't have the tools, so there we usually forward it to DCI, because a laptop will have various IP addresses. If you log in a cybercase with a laptop or at Java, it will read a different IP address the next day. So those are the only 2 ways we try to physically link the perpetrators to the return. Thank you.
Perfect. Thanks, Mr. Wakoli. That's very interesting. And maybe Mr. Tema, that's and Mr. Alex Mureithi, who's with us today, that's a point to note. Maybe we can escalate it, how our departments can work closely together to share the information. Very interesting, Mr. Wakoli. So in the interest of time, I think we've already tackled the scenarios and procedures for mandatory forced registration. Mr. Tiama did that very well. And then we've also touched on some of the challenges that our Northern Region colleagues are experiencing. But maybe at this stage, then I can bring in the issue of e-TIMS and what is the role of e-TIMS when it comes to curbing some of these fraudulent invoicing schemes. I'll start with you, Mr. Tiama. In your experience, in your opinion, what is the role of e-TIMS in securing the revenue base? Is it the silver bullet? Is it the solution to what our officers are the challenges they're experiencing on the field? And then tied to that is VAA had some successes and some failures. Should it be brought back in light of some of the developments and initiatives taking place when it comes to invoicing? Will it now serve a more important role? We can start with you, Mr. Tiama, and then jump to Mr. Mumo.
Thank you, Mandy. I believe technology is meant to work for us and also isn't our work, especially when we are talking about the e-TIMS, which is an invoicing system. Verification of invoices has always been a challenge, and the VAA was something that was coming in after maybe an event has long occurred, because I know from BTO's point, they didn't have the capacity to be running the VAA on a real-time basis. So you'll find that maybe, yes, an event has happened, there's a fictitious invoice that has been claimed, but it is this is coming to our attention when maybe it's very late now. We start firefighting. So you'll find that with the e-TIMS, we hope that it will be the silver bullet, though not yet there, with better uptake. I think things will get better, because from my point of view, as it is today, we are supposed to be having all traders at using the e-TIMS. So for this one, then you'll find that even the amendments in the Finance Act, where we were told that claiming even the allowable expenses and income tax, then they have to have been generated from the e-TIMS. You see, this kind of gives us a cushion on the extent to which audits may take time, because now that will be having prior information forehand, and we are able to assess better. But still, some of the gaps that we may be having, it's more of technologically a technological system whereby garbage in will always also have garbage out. So because to identify these missing traders who may also just come and bring in the data, because it's a point of an invoice being generated, but at the point of generating the invoices, we are not able to validate if the transaction has actually taken place or not. So we may say it is working for us well currently, but we can't say that it is the silver bullet. But I believe with better collaborations amongst other divisions and departments within the authority, and also other government agencies, we may have more system integrations, which will also kind of improve some of the leakages that may be existent in the uptake of the e-TIMS. Because from my point of view, yes, there are still gaps there are leaks that may be utilized by taxpayers, which will be very difficult for us to bring out at the point of incubation as TB, because that is in the very early stages of identifying these transactions. So maybe Momo will chip in and Mr. Wakoli, but e-TIMS is working for us, but we are not saying that it's the silver bullet, because it really needs some way of trying to deal with the Kenyan taxpayers, who will always be a step ahead of us. So thank you.
Thanks, Mr. Tiama. Mr. Momo, would you like to chime in on the role of e-TIMS, if any? And now, I guess, with the VAT auto-populated return as well, perhaps we'll see some of these cases of missing traders reduce. Mr. Momo?
Thank you. Thank you, Mandy. Thank you, Mr. Tiama. I hope I can be heard.
Loud and clear.
Thank you so much. Now, interesting stage at in terms of where we are as a country, as an authority, for the purposes of doing VAT input output check. Why am I saying so? In the past, when automation had not fully swung in into KRA, the basis for doing audits, investigations, and such really mirrored around verification. And this verification was just a mere correspondence of what we call cross-matching. In VAT, cross-matching is very important because what someone sells then becomes purchases to another person. So there is no way it will be a different figure, a different item if it gets to the customer. So when you get to the customer, then there has to be a proof or a linkage between what exactly they have actually bought and what exactly that seller sold to them from where they bought it. Having said so, there has been a sort of upward momentum, and this metamorphosis has really helped even in terms of numbers, in terms of injection of revenue from VAT payable, and stopping claims of VAT that actually are not warranted. From the manual regime, you get to the automated regime, and in any authority that deals with VAT for the purposes of just verifying, or rather making sure that the inputs are actually rightfully claimed, there will always arise that problem. When you look at the history of digitizing and dealing with VAT and missing trader, even from Asia and Europe, and even basically in Africa, the countries that have been a little bit ahead of us, you will find that this problem has always occurred, and it keeps on recurring. Even presently, you'll find there are missing traders that do ply their trade in advanced countries like Denmark, UK, and such, because the opportunity to bring in an input claim becomes very evident because the taxpayer takes it as a right within their obligation, and therefore they can be able to bring in anything. So to curtail whatever has to be brought in, then a while ago there was the introduction of VA, and that was from January 2018, and it really performed quite well because it was an eye opener, which was automated cross matching, so that anyone who claims to have bought from you, then there's need for that proof. But when it was challenged in court, then there was the need for sort of an automated way linked together with what the law actually said. That's when we had the aspect of section 17.2 needing to be beefed up, so that it clearly says there's an aspect of actually declaration other than just having the documentation that was being asked for before. And at some point, we also had either the declaration or the documentation. But as we speak today, of course, it is and. So those two go together. Now, the aspect of ITIMS is a high level way of doing the VA, cross matching, trying to check that whatever invoice you are actually claiming has already been mirrored within the KRA database, because the seller did do the transaction and actually enabled what we call transmission. And therefore, with KRA having this information, the beautiful invention within eTeams, and that is kudos to that team because they did quite a wonderful duty and delivery, in that the invoice numbers then should be similar. In that there is no aspect of one seller having their coding of invoices, because those are problems we had in VA when the verification and even the cases would go for objections, and there would be litigation based on this. Someone would say, this is my series of invoice, I cannot match with that other person because I don't know how they keep their books, which was very true. But from the beautiful invention through eTeams, you will find the COI number that you're talking about has to be similar to what is within the database, and therefore mistakes of such things in terms of amounts, in terms of description, in terms of what have been dealt away with. For any sort of system for cross-matching, it is very important because VAT automation, or rather automating the process, makes it easier and even legit in terms of having to go through a big chunk of data, because when we do it manually, like using the VA or the cross matching, we may not be able to cover some good ground. And therefore, as much as it may not be a silver bullet, but it is the right way to go in terms of bringing future certainty that whenever there will be that automated cross matching, the invoice has to be there transmitted and it's in the data, then we will have a lot of yield within VAT. And finally, as you mentioned, maybe in the current also attempt or efforts from BTO to bring the auto-populated VAT return is also a beautiful one, because already they will have preempted your sales, mirroring the invoices that have already been transmitted, and you can only do an upward matching, upward addition. You add now those ones that were not transmitted or any other that you feel has been left out. For the purchases, the converse applies, that you can only claim the ones that have been accepted or rather can be checked in the database that KRA has. If not, then you cannot inject any. So those sort of stop gap measures are very critical, because they will help to only sort and mirror in whatever is supposed to be declared in terms of time of supply and whatever is supposed to be declared in terms of the right to some input deduction under VAT. Thank you, Mendy. Back to you.
Perfect. Thanks, Mr. Momo. Thank you, Mr. Tiema. I will, Mr. Wakoli.
Can I make a
please feel
comment?
free.
Yes. From an I&D perspective, what we are seeing is that there are more than 3 players in the whole of this missing trader event issues. So we have categorized them into tier 1, tier 2, and 3. In certain situations, tier 4. So in the value chain, the stronger person is the one with the money. He's sitting on tier 3 or 4. So he's the one who has recruited people below him to purport to be suppliers. Now, the reason why iTax was unable to beat these people is that there is no consequence. There is an inhonorability. They cannot be traced. So what we are doing is we are suggesting that the silver bullet in iTax, because even if we move it to eTIMS, in eTIMS they are already doing a similar situation that they will beat it. So in iTax, we recommended that we bring the one-time password in the front office, so that in tier 1, and in this present case, tier 1s are usually missing traders or very serious LTO customers who are not aware that the invoices are being claimed. So if tier 1 person does not file a return, then in the value chain, there will be no beneficiaries. So we want to introduce a one-time password. And ICT are suggesting that there is a cost implication to it, the way we are doing it in back office. So that one-time password can only go to the CR12 director of this company, so that the consequence of filing fake invoices is then raised to the registered person. Because presently what we are seeing, the value in these transactions are not in these invoices. There is an identified person who is outside the invoices. So supplier A could be the missing trader, the beneficiary is there, but the goods were never brought by supplier A. So if we bring the one-time password, he will not be able to deny when he goes for prosecution that I'm not aware of this. Thank you.
Perfect. Thanks, Mr. Wakoli. Thank you for that response. In the interest of time, let me jump to the next set of questions, and then we'll open the floor ideally for another, towards the end for the last 10 minutes. Mr. Tema, just before we go back into some of the technical questions, we had a comment regarding strengthening the VAT recruitment templates and the process of onboarding special table cases. Maybe you can just comment on that, how we can go about strengthening VAT recruitment templates and processing of onboarding new special table cases, briefly.
Thank you, Mandy. Okay, when we are talking about strengthening the VAT recruitment, we are talking about the process itself. And this, I believe, has been done well through bringing in the TB manual that has streamlined the processes and the procedure on how and what we need to do before addition of the VAT obligation, which was largely mirrored in the VAT guidelines that had been issued after the realization of how these missing trader schemes were taking advantage at the point of entry, just to bring in more input deductions and sales, fictitious sales. So that is what is there under the TB manual. So I believe there are clear guidelines where what verification documents you need to check and the processes, because we are doing it currently under 2 tier levels, so not just the officer completing the transaction, also a supervisor has to verify the application before its approval. And also then again, when you are talking about the special table, the special table, as much as it's more of a compliance functionality, also TBE, we are involved in the same directly, especially for some regions. I believe the special table cases have been left for the TBE officers in those specific regions to handle. So what happens there is that under what we are calling the taxpayers who are still under the incubation, because for the incubation, we have 2 specific periods. We have a 12-month period and also have a 24-month period. For the 24-month period, we are dealing with newly registered things. So despite of the obligation that they have, that we do for 24 months. And then for those new obligations that we've added to existing taxpayers, then that will do for the 12 months. So you'll find when a taxpayer has come on board, has been recently recruited for VAT, we do not expect that with the checks that have been put in place for this taxpayer to fall within the special table. But on special circumstances where they do, then the special table guidelines kicks in on the procedure for removal, because submissions have to be done, they have to be approved by the relevant sector heads within your respective TSOs. I believe those are what are there. We don't have special ones for TBE, but we use the ones that have been approved by the commissioner. So thank you, Mendy.
Thank you, Mr. Tiama. Thank you very much. Just before I go to the next question, please allow me to request my colleague who's joined as the host to transfer host rights as soon as possible. Thank you. So Mr. Momo, maybe I can just ask you to tackle the next question, then I'll hand over to Mr. Wakoli to tackle number 14. It's regarding cases where taxpayers are under incubation who clearly have now VAT withholding certificates, but are persistent nil filers. What do you think we should do in that scenario? Quickly.
Thank you, Mandy. For withholding VAT is an interesting phenomena, and it has been on and off, of course, but for the last since 2014, it has been consistent in our administration. And now that the rate has also been reduced to avoid most of the withholding VAT refunds, looking at someone who is actually filing, and yet there are some certificates that are within their PIN. It's interesting, and a simple approach from an officer perspective would be go ahead and query these certificates, try find them within the system, try check where they're coming from, invite the taxpayer for an interview to find out whether they're actually doing this trade. If indeed there is some activity in terms of business, money flowing also, because remember, withholding certificate for VAT, it only happens when most likely there is some payment that has been done for that transaction. Then go ahead and raise assessments, because we have guidelines for the same. Do not just look at that taxpayer to continue putting in nil returns. Back to you, Mandy.
Perfect. Thanks. Some practical solutions we can use in our day-to-day, ideally. Yes, Mr. Tiama, over to you.
I would like to add something onto that because I believe this. Okay, I'm not. Okay, maybe I've not understood the question well, but I'm very curious to understand how somebody who has a withholding VAT certificate can file nil VAT returns, because maybe this should be a case of perpetual credit filer just claiming the withholding VAT credit. Because if there's a scenario where they are able to file VAT returns that are nil, then we clearly need to escalate this issue to BTO, because then definitely maybe ITAX is failing us on that end. So thank you, just that.
All right. Thanks, Mr. Tiama, for that clarification. Indeed, I also wasn't quite sure. And maybe if the officer who had posed that question is in the forum with us this morning, you can also shed some light on that experience you're encountering. Maybe Mr. Wakoli, I can bring you in at this stage, and just to remind everyone that this session is being recorded and will be uploaded onto iKnow, so you can continue to make reference to it a bit later. Mr. Wakoli, we have scenarios whereby, as you mentioned, there are some key industries and sectors that are typically linked to the missing trader scheme. Is the construction sector still one of the more prominent sectors associated with the scheme? And what are some of the emerging sectors that officers should monitor closely? And I know you had mentioned it in the beginning, but maybe you can just briefly restate some of them that wants to watch.
Okay. The construction sector is still at the forefront of these missing traders. The other sectors are steel mills because of the scrap metal that they get. So they will then have fake invoices, but they really got the goods, and you will end up having them in a refund position. All these refunds for scrap mills are suspect. The other sector is the ICT sector, where we have electronics and technology, phones, machines, laptops. Then we have the public sector suppliers. You would find an example, somebody being paid by a county government, then let us assume 100 million, then within that same month, you see him claiming 98 million as supplies, and he was doing a construction. So that is suspect. Tied to the public sector, a driver is the kickbacks. You should understand that within that sector, there will be kickbacks, and the cover will be these fake invoices. Then we have consolidators. There are two types of consolidators. We have the registered consolidators by customs. So they bring goods on behalf of many other local importers. So you need to go to the goods manifest for you to be able to identify who are the actual importers and what are they doing about the input VAT they paid to customs, the import VAT. Oftentimes these goods are not theirs. They will only be declaring a commission for consolidating on behalf. So when you go down to their suppliers, you will identify missing traders. Then there are importers who have no local transactions. So many of the importers, for example, in Italy, are not importing these goods. Instead, they're being imported by other importers who are not declaring any sales. So once they have the goods for local declarations, they will be given fake invoices. Then we have a scenario where, because of the delayed refund position, there are many people with huge credits, and the process of going for refund, passing through audit, they don't want to go through that process. So they will eat up these credit balances by issuing invoices. The risk of declaring for income tax will be dealt with very small margins. Now, under consolidators, the problem, the risk is that they will misdeclare and underdeclare. So the goods that will finally reach the final importer are hugely undervalued, and hence the need to uplift it with fake invoices. Now, one other thing you need to know, in each of these sectors, you need to know their margins. People dealing with fake invoices will be way below. So let us assume if you are an importer of ICT equipment, computers, PCs, laptops, the margin could be 15%. But you will find a scenario where the missing trader, the supplier, has a margin of 0.0. So as you look at any taxpayer, always determine what is his GP, and you will find it is always below 1%. Another red flag, these missing traders, the amount of money they are getting is the 16%. Now, this 16% is being shared within the participants. So where you find the purchase price is higher than the selling price. So why would somebody buy something at 20 shillings and sell it at 18? It is the VAT component that is being played with, and it's the commissioner who is losing. Oh, thank you. That's all.
Thank you, Mr. Wakoli, for that. Some common scenarios we should look out for. Asante. Maybe Tiema or Mr. Mumo, you can chime in on this. And I'm seeing time is not on our side this morning, unfortunately, but just very quickly, what exactly is the procedure for reporting missing traders? Now, TB officers are equipped. They have identified a likely missing trader. What is the procedure for reporting them within KRA?
Perhaps I would allow that Mr. Tiema to handle.
All right, Mandy, so thank you. So maybe especially at the point of registration, because I've seen we have a question that is tied to the same. So in scenarios where you see that this person has clearly been identified as a missing trader, then the first thing that you need to do, if it's an application, then definitely you need not to approve that the application, because you will need to reject, because definitely that will be the source of our problems. Where you find them, then you need to escalate the same. I believe the same should go to I&SO team for further investigation. So they should be raised to their respective cluster heads or TSO heads, so that at least this is well reported, and also for information sharing with other TSOs, because the taxpayer may also change a TSO or maybe just go to another TSO for services, so that maybe we have a clear database on where we can see, and I believe I&SO are the best place situated to maintain the same, so that also they can share with DTD, so that we are very clear to know which directors or which companies are within the scheme, so that in case we are able to encounter the same, we can easily fast track and take appropriate actions. Thank you, Mandy.
Asante sana, Mr. Tiema. Thank you for that guidance. Again, in the interest of time, I think we've already by and large tackled number 16. Mr. Wakoli was able to give us some of the scenarios that they use, IP addresses and its feedback that we've received, and maybe just to work within, ensure our departments are working closer together to identify some of these schemes. Mr. Tiema, I'll bring you back just very quickly to just again give us some guidance on how TB officers should address a scenario whereby this is a clear candidate for missing trader that has come to your desk. However, they have all the requisite documents for VAT registration. How can an officer be empowered to decline to register this taxpayer for VAT, given various scenarios? For example, all the other pins that are linked to them are non-filers or defaulters. And then similar to that, Mr. Tiema, maybe you can just clarify, are there any other tools that TB officers can be empowered with to give them a better insight of the taxpayer who is registering for VAT, of the taxpayer who is under incubation, essentially a 360 view of the taxpayer, tools, and also scenarios whereby you can see a clear candidate for missing trader? Thanks.
So thank you, Mandy, for question 17. I believe that is what I was addressing earlier, because I'd seen it and it was clearly tied to procedures for reporting missing traders, because this is a clear indication that this taxpayer will also default upon being given with a VAT obligation. So we need to just identify and decline the application, giving clear reasons as to why we are declining. And this, we can clearly identify that this is a director in company A, B, C, D, which maybe has been placed on the special table, or maybe they are clearly within the missing trader. But if they're within the missing trader, then you don't mention that to the taxpayer, that you need to escalate the same appropriately. So for other tools that we may be having currently, we wouldn't say so. We do not have other tools, but what the tools that we have, the Jasper Soft Rights, the Insight tool, and back office, the iTax. Those are the currently tools that we are using. But for the TPS officers, they have access to BRS read-only rights. So where we have applications and we really need to verify if indeed these are the directors as listed, then we need to share the same with the TPS team to just give us, because I know there is a challenge on user creation from the BRS end. They have limited access that they can offer KRA staff. So we need to just make good use of what we have, and that is just through our good relationships. Now that we are well tied with the TPS team, we always work well because we've been a unit before. So we shall continue using the same. But also where now, for example, what I was alluding to earlier in terms of the missing traders, we need to have reports, appropriate reports that can be hosted either on the JustPassword tool that we are able to download easily for us to just get more view of a taxpayer with whom we are able to. We have received a request on additional VAT obligation or who is under incubation for us to take appropriate measures. So, but we believe that in the future, I believe the authority is working on something, and we believe that maybe our system integrations within the country will be enhanced, and we'll be having a better way in terms of knowing who to register for what obligation when they meet the relevant registration thresholds as outlined in our various acts, and also maybe for ease of monitoring declarations for those who are under declaring because of the business transactions, but we are not yet there, but we hope we'll get there very soon. So for where we are, okay, question 19, I did not get it so well, Mandy, because I believe with the e-teams, we are better off in terms of compliance because we are able to get these transactions from the taxpayers early enough. So losing revenue, I'm not sure of how we are going to lose that, but maybe if you may clarify, because I believe e-teams has brought in a better way for us getting VAT early enough because the returns are being auto-populated, such that, you know, one of the issues that arise, and that's why we get even those withholding VAT, hanging withholding VAT credits. It's because of the what Momo had earlier talked about, the section 12, the tax point. You see, we are unable to declare transactions when they fall due. But with the e-teams and the auto-populated return, then all cells are already populated, despite the fact that the taxpayer may have not been paid by their suppliers, but we are able to view that transaction at the point when it's supposed to. We don't have to wait at the point of withholding for us to know that the transaction happened. So I believe we'll have more revenue rather than lose. So thank you, Mandy.
Perfect. Thank you very much, Mr. Tiama, for that. Maybe we'll bring the TB team back at the very end for closing remarks. But Mr. Wakoli, as we wind up, I'll pose the last two questions to you. First and foremost, regarding Section 17, 2A. One of our officers in our early sessions had wondered and posed the question whether proof of payment, an enhancement on iTax to require proof of payment, will probably work towards resolving the missing trader issue. Is this an avenue that KRA has pursued in the past? And then finally, Mr. Wakoli, though it's already been touched on in previous responses, how can we identify directors who open multiple companies and again will be candidates for missing traders? Demi, just before you go, Mr. Wakoli, I think as Tiama mentioned, TPS team that have the rights to the business registration service and might be able to, one, verify the details, the updated details of a CR12. They're based in Times Tower on ground floor. You can reach them on extension 3933 on most days. So that's an avenue you can utilize, Mr. Adede, if you needed to verify company details of a specific company. Director details, I beg your pardon. Mr. Wakoli, over to you. Just also request anyone who's still available can fill out our poll that's running now. Thank you.
Now, to identify the directors of these multiple companies is one, we use BRS. Now, we have the internal officers with the login rights, which is faster. So if you get in touch with ISO, there are officers there who can give you the details within the day. Then we also use PIN association on Jasper. So PIN association, you'll be able to see the listing of any other directorships these people have. We also we go to finance and identify the mobile numbers of the people making payments. Oftentimes we find it's either the perpetrators, the directors, or tax agents. Interviews with them will lead you to how many other companies they have. Then we have also on Jasper, the mobile number association. So we usually get the mobile numbers of the company profile and the director profiles. However disparate they are, within those numbers, in association, we can be able to identify the others. On the question of whether payments being put on Section 17 can solve this problem, the answer is partly. Now, the missing trader scheme is perpetrated in the different scenarios. There are scenarios where there are indeed transactions, but the owners of those goods don't want to be in the formal supply chain. So they put the missing traders as a fall guy. Then there are other instances where it is pure fake invoices. There is no value changing hands. An example is, as I said, where it's a kickback or a public sector person. Now, in 2018, we did demand that you pay the VAT, but for income tax, we would allow you as long as you demonstrated that you paid for these goods. So we would then interrogate the payments done. Were they cash? Were they TT? Were they check? So depending on the threshold, we would then allow you to claim those invoices. So even currently, we are asking proof. But we are seeing, especially the steel mills, have all the proof, even beyond. So they will show you they didn't even pay cash. They sent a TT. They will also show you they have done the 2% withholding. So they are saying, as far as we are concerned, we are okay, which is correct. So the only then remedy we have is to confirm that they are in fact knew there is fraud within the value chain. So insisting on payments may not be the solution. Thank you.
All right. Thank you very much, Mr. Wakoli. It's now 10:30. Indeed, we have come towards the end of the session. Maybe I can just request Mr. Mumo, any final remarks from the panel? Maybe you can speak on their behalf. I know you have to go to another session, and then I'll bring in Mr. Alex Mureithi for some closing remarks on behalf of TBE. I think by and large, some of the questions that have been coming in throughout the presentation were subsequently addressed as the presentation was going on. So that is sufficient. We will try to have this uploaded onto INO within the course of next week so that you can continue to make reference. I'll also just request us to take some time to fill out the poll that's running, where you can also share some topics that you'd like to be trained on in future. On behalf of TPS, Asanteni Sana, I'll now hand over to Mr. Isaac Mumo for final remarks. Thank you, Mr. Mumo. Over to you.
Thank you so much, Mendy. From where I sit, I'm also grateful to have an opportunity to share together with colleagues in a bid to improve and add more quality to our deliverables. My colleagues, Mr. Tiema and Mr. Wakoli, have been also very intriguing and value-adding panelists, and I really have enjoyed also, responding and exchanging the knowledge together with them. And for the entire team of TBE and the time that we have been able to be allocated to share together, I'm grateful and looking forward to everyone converting the knowledge that has been attained to look forward to improve on their deliverable. At the same time, we'll make sure that the authority has been able to be effective and efficient in delivering the service that we have committed ourselves to do. Asanteni sana. Tupatapo wakati mwingine tupatane kwa ajili ya kuendelea kunoa makali. Asante.
Shukran, Bwana Mumo. Mr. Alex Mureithi, maybe I can welcome you for your final closing remarks. Asante.
Thank you very much, Mandy, for this opportunity. Mine will be to move a vote of thanks to our panelists. Thank you very much for availing yourselves. Indeed, this has been a very, very good session. Thank you for opening up our eyes, and we hope when we call upon you next time, you will gladly present yourself or avail yourselves, because indeed we have not had enough, and the team from TBE TPS will be very glad to host you again, so that we enrich our knowledge in this or others, other areas that will enable us meet our targets, and of course expand our knowledge as we support our taxpayers. Again, thank you our participants for joining in from TBE and TPS, and this will be the beginning of other sessions. So we ask you to always give us areas that you need to be trained on, so that we can deepen our knowledge. So asanteni sana, and we hope to meet again in future trainings. Thank you, Mandy. Back to you.